Oh, right. This is L. Jermaine Russell. It's February 26, 2018. Definitely had a long weekend. Wasn't able to record like I normally would on Saturday, going over some of the stock market trades that I made during the week, and Sunday, where I would normally go over stocks that I would want to trade for the upcoming week. So I am doing it now, probably a little under 2 hours before the market opens. But I did want to keep it going, have a weekly video of these things that I'm doing so I can monitor my progress. So, you know, things happen, life gets in the way, and that's where you're able to try to figure out like where you can find that balance of things that you need to do and things that you don't need to do. So and this weekend there were things that I needed to do, and it was actually very beneficial. So so moving along to trading, last week, which was a shortened week, we had Monday off because of President's Day, and it gave me some time to kind of reflect on some of my trading. And we'll start with NVAX, where I ended up buying this. And this is something that normally I do not like these massive downtrends, and this is why. Even though it's on the year chart, or it goes for multiple years, it's over the 100-day moving average exponential. This big drop, I'm still not a big fan of, and I'll tell you why. Is this going to continue to go down? It got up to 260, which is probably the point I should have sold at. I think 265 or 267 was actually the high on this trade. So I ended up buying this on Tuesday. I ended up buying this on a Tuesday. Let's go back to the 20th. That would have been over here. Well, no, I didn't buy it on Tuesday. I'm sorry. I bought it on the 16th and held it over the weekend. So I bought it at 230. And when I bought it at 230, I was like, yeah, somewhere around here that I bought it at. And as you can tell, then the very next day it went up to, well, the very next trading day it went up to 265 before coming, finding not a double top, but it wasn't testing this pre-market high anymore. It definitely made a double top during the trading hours at 260. So 260 was definitely a place I should have bought at. And after that, it just continued to start the downtrend. So I didn't really, make a great percentage. I mean, 11 cents a share. Ended up selling at 241 because I was being stubborn, and I think I sold it somewhere around here just because I was being stubborn. No, probably more around here, because I think that's where it started to go down. Or it could have been over here. Did I write down the? Yeah. As I look at my notes, I'm seeing what time of day did I sell it at, and I did not sell it at. I didn't write down the time of day that I sold it, which is probably a better thing. But I would guess that I sold it somewhere around here, knowing that I was probably frustrated at what it was doing on the day. So I let it. So I let it go. I let it go. Hold on. Sold NAVX within the first 15 minutes of the stock market. So I did write it down. Haha. It wasn't holding 250. So this was over here. It wasn't holding 250. It definitely came down. And it wasn't holding 245. And it definitely came down. So I got out. This is considered a scratch. And ideally I should have sold on the previous trading day, but got greedy thinking it could go past 260. So I even wrote in my notes how I thought it can go past here with the I guess I was, wishful thinking that hey, it could go higher, but it definitely did not, and it was not. So, sometimes you just gotta trust your gut, and oftentimes I don't trust it, and I think that I can outsmart the market when that's not the case. Sometimes you just have to take what they give you, and when you take what they give you, then you can be able to progress and accumulating your profits. And since I wasn't taking what they gave me, I kind of just fell to the wayside on this one, and just getting a scratch. So I know when it comes to this, and it's not a low float either. This this 375,000, that's not good. Well, not thousand, but million. That's not good. That's not something that an ideal company that I would like to get in. And so I kind of refined my scans. If I show you what my scans are, and this percentage, I don't know why this percentage got to right here, but it should be a percentage change of 5%. Glad I came back. 5%. I usually look for 5 to 20% on the trading day, but I put down 50. I know it's not going to scan now, but what I did for my float, and this is if you're using Thinkorswim, shares is identified as the float. So what I do with the float is I put it at 2 million and 50 million. So generally I like to think that less than 25 million tradable shares is low float, but I'm looking at some stocks that are in the 30,000, 40,000 area that have been kind of doing some good movement as a low flow stock, or the stock that doesn't have a lot of shares that are just available to trade. So because of this, that's why I have this 2 million to 50 million stocks, shares that are available in the stock. So we'll see how this week progresses as I continue to maneuver around these little nuances that are preventing me from really capturing the meat of the move on some of these stocks. And being a low floater will definitely help propel me to gain more, as opposed to going for these stocks that are at 300 million shares available to trade. That just leaves too much open room for disaster with short sellers. So NVAX definitely didn't do it for me. ANTH, another company that I was looking at, another biotech, it had a breakout on the day. I ended up buying this on the 21st, which was that Wednesday, right, where we see here it really started to ramp up. And I remember I bought this when I was traveling, and I bought it I was like right around here. I was right around here thinking, oh, it can go up some more, and I'm buying it on the dip. And I really wanted to get it at 250, but I ended up getting it at 257 because I thought that this was going to ramp up and retest at 283, which it ended up doing later on the trading day, but not to the degree that when I think I was probably being greedy again. I wanted more than 20 cents a share, and a part of me was probably a little bit mad that I did not buy at my target price. So that is something else. When you buy at the price that that you could have bought it at. And originally during the trading day, what I tend to do is I will go, if I don't see anything on my watch list that is worthy of trading or doesn't look promising, and I say, you know what, I know that there's something out there, what I tend to do is I'll go to the top 10, and on the top 10 I will go to the NASDAQ, and NASDAQ will just give you a list of top 10 stocks that have been traded on that day. And because you have these stocks that are, the top 10, and the volume might look right, and the float might look right, and the price might look right. Then you start going at looking if you wanted to buy the stock, and that's what happened. I end up seeing this stock trading at $2.07 during the trading day. I really saw it like right around here, but was not paying attention that it was bouncing not only off the VWAP, but that it was trying to retest its its day high, and the day high was near the 215 area. I wasn't paying attention to that. I was thinking that, hey, it's going to come back below the twos because it was so close to that $2 area, and really um, there wasn't any news that I saw that was reputable that could allow it to go higher, and I still don't. I still don't. So not all farmers. Why is it? Move. So no, that's what it was. Yeah, it was the price target. The price target was moved to $10. So I think that was the main reason why I ended up buying it, because there was an analyst upgrade that would move the stock up to $10. Now, if you look at the price, it said, at the time when I saw it, it was at 207. I didn't even really look at the news, like I should have. Because if I had bought it at that two, probably I more than likely I would have bought it at 210 or 215, and then watch this ramp to 283. I would have taken that. That's a good 50, 60, 70 cents on the day per share. So I could definitely have taken that. That is something that I would rather look for than the 10 or 20 cent shares. I'm not trying to scalp shares. I really want to take this type of meat of the move. And if I recall, I'm not 100% sure if it's a low floater off the top. Yes, it is. It's under 21 million. So this is what I want. I want these low floaters that have potential to move, and not only that they have the potential to move, but they had some type of news. They also have some type of let's look at the year chart so we can further detail it. Once again, I still don't like that drop, but it was over the. It was trading on the actual 100-day moving average before jumping up. Now that jump up in itself gave me an idea that, hey, because it is spiking up, it could go up some more, but on that, when I saw that 207, I really thought it wasn't going to hold, and it was just going to come back down just because of that little drop that I had right here. But this drop wasn't as bad as NVAX. So, I could have, in retrospect, I could have jumped in, but I was not sure, I was not certain that it would do well. So I left it alone. So when in doubt, you just really get out, leave it alone. So I ended up buying at 257, and in my stubbornness, I ended up losing the shares, going down to 227. So I lost 30 cents a share on this stock, and that's not something that I would want. That's not something that I would really encourage. So I have to master my stubbornness and making sure. And I remember when it was just trading sideways like this, and I said, "Oh, it's gonna grind up. It's gonna grind up," and I was just hoping, but it's not. And now it might actually have some potential to try to get back over that 250 area, because 250 was that major resistance during the day. So, this is something that I have learned from, and I am realizing that once a stock starts going against me, and I'm just doing it on the day trade itself, that I could really leave it alone, and just get out. I'm not forced on staying in. I'm not forced on, trying to scalp some money, if scalp some shares, or cents per share. But what I am doing is focusing on the technicals, and if I focus on the technicals, then I can always know when to get in and when to get out. Looking at these technicals, let's go back to the 2 day, 2 minute, 5 day chart, from this ramp up. You see, it even traded above the 100-day moving average before coming down into after hours. But if we see on the technicals on this day, before it started coming down and it started trying to ramp up again, and it came back down. Right now, it was just trading below the MACD. This this line right here is, I try to keep it simple. Above this line is positive. Below this line is negative. Obviously, you can see that the momentum shifts every time that it does go below that line. So when we're looking at the MACD, when we're looking at the momentum, majority of the momentum is staying below the line. That is another indicator that I could have gotten out. I could have just sold on the spike, and that's another thing that I'm looking at. If I buy a stock the previous day based off the 100-day moving average, the next day I can't use that 100-day moving average as a determining factor if the stock is going to ramp up again the next day. So on this day, I can't use this 100-day moving average as I did on this day, because now this stock has a different personality. Now this stock is not moving the same way as it is here. So let's look at it over here, right? When we were here, we saw that it was moving. It was moving, not as strong over the 100-day moving average, but it was moving. And because it was moving, it allowed it to have a different personality than it did over here, because now it's starting to trade below the 100-day moving average. Let's look at Roku, because Roku had a good week last week, before it crashed. Before it crashed. So even when it spiked over here and definitely came dramatically down, it started to move again. Actually, this is probably not the best chart to use as the 100-day moving average and its movement, because it trades so crazy. This one trades like wild and all over the place. But I'll find another one that really, I'll find another chart where it really follows the 100-day moving average, and then the very next day it just starts to crash on down. When Roku tends to do this a lot, it will go up and then crumbling right back down, and then go up and then come crumbling right back down. So and that's what it did. After hours, after the earnings came out. So this is something that really can't use as a guiding example of how the 100-day moving average acts on one day versus the other day. I get my cup of coffee, and then lastly, I did actually put in a purchase order on WWE. So if anyone who knows me, I love wrestling. It is my male soap opera, and I have been procrastinating on buying this ever since I wrote an article about this back in January, where I thought subscription-based stocks like this one will have the potential of running and going higher, and that is what it has been doing. So when you're not paying attention to your own intuition, you miss out on plays like this, where since October, oh my God, $22 up to $37, and they give dividends. So it's kind of hard. It's kind of hard when you see stuff like this, and that, hey, this could possibly go back up based off of, certain criteria that I follow, and it actually does it. And you're like, why did I not just do what I thought? So, I thought it would do this. It did it. I am now like in it. So I'm in it at $37, and now, or 36.99, or yeah, something, a little bit under $37. And I know that this is not one of those plays that just ramps up, automatically. It doesn't just run. This is something that I want to hold just a little bit, for maybe 2 weeks, maybe a week. Maybe I might get $1 a share out of it. Who knows? But I do want to put some of my investment into this company, because I feel like that they will not only, allow some money to grow, but it will also provide an opportunity where I can, gain some dividend as well, because it does give dividends, which is always good. Dividends are always good. And in March, so let's see if I can, not be as antsy and try to sell this prior to March 14th, because I'm definitely in before the dates that are usually required for anyone to receive dividends on a particular security. So now that I'm in, I'll just wait and see. So that's all I have really traded last week. I'm going to go over some of the stocks that I see that are available for this week. And as you can tell, I already have some of these up, but I'll do that in another video. All right, thank you for watching, and I'll catch you in the next one.